If this took you by surprise, you haven't been paying attention. Welcome back to Crypto Curious. This is not my normal weekly review of crypto. I did that Friday. It's now Monday evening, and I decided that with everything that's going on both this weekend and today, I should put something out, see if I can't inform you. So let's get started. As always, if you find this information valuable, first of all, the most important things you can do is to like, subscribe, and share. If you feel that it's extremely valuable, you can always go to cryptocurious.tv/support and send a little crypto my way. So let's start out first. And that, like I said, I've got a lot to go through today, and hopefully this will be a relatively short video, but somehow I'm not sure that it will. First off, we'll start with the Federal Reserve. It did a couple of things this weekend, yesterday in fact. One of the things it did, first and foremost, is that it announced that it's going to reduce reserve requirements for banks to zero. Now, unlike the U.S. Congress Banking and Financial Committee, who apparently doesn't know anything about fractional reserve banking, I spent 30 years in the finance industry, and I do know about it. It was, and up until, this is going to change on the 26th, I believe, which is, March 26th right here. So starting 10 days from now, it was required that all banks have a 10% reserve for lending, which meant that they could lend every dollar that you gave them, they could lend 90 cents. Now that was bad enough. Every time they created a loan, it went against that reserve. They had to maintain a reserve of 10%. So that limited the number of loans that they could put out. Now that they'll no longer have any reserve requirements, it means that they can loan out as much money as they desire. Literally unlimited loans, which is literally unlimited money that they're going to be creating out of thin air. This isn't good. This is the opposite of good. This weekend, a bank in Midtown Manhattan cleaned out of $100 bills. This is what you call a run on the banks. Now, you may be thinking to yourself, but the FDIC insures my bank account. Yes, it does. It insures your bank account up to $250,000 if the bank goes under. It does not insure your account if the bank runs out of money. And that's exactly what has been happening in New York. People in New York who probably know something have been pulling money out of their accounts up to $50,000 in $100 bills. And so the bank ran out of $100 bills. Of course, it was replenished the next day. But the thing of it is that the ATMs, which carry $20 bills, they were fine. No one bothered them. It was $100 bills people wanted. This is part of the cash desire everybody has. This is what has been going on with the markets, okay? The other thing that happened is that the Fed also began a new round of QE, and it's actual QE. They're no longer trying to hide the fact that they are quantitative easing up to, and not even up to. They are going to put $1.5 trillion into the markets. That's you can't hide that. So our national debt that was $23 trillion and some change is now $24.5 trillion and some change, and it's not going to stop. It's not going to stop anywhere anytime soon. Global markets, zero rates, zero impact. Fed and company failed to calm the markets. If you looked at the markets, at the stock markets today, you found that they ended up the day 3,000 points down from where they started. And it didn't start when the market opened. It started yesterday. The futures markets were down so far that the circuit breakers came on and halted trading for 15 minutes as soon as the market opened. This is just the beginning. Literally, just the beginning. Gold and silver are both down. Silver dropped to $11 an ounce. Now, my friend Mike Maloney over at goldsilver.com, he has been saying that if silver dropped, he was going to buy some. Well, it's dropped. And, again, if you are at all familiar with the gold-silver ratio, and let's see, I believe it is on here as well. Let me see if I can find it. Gold-silver, there it is, gold-silver ratio. 114, over 114. So what that means is that if you wanted to convert silver into gold, so if you wanted to buy 1 ounce of gold with silver, you would need 114 ounces of silver to equal 1 ounce of gold. That is, as you can see by this graph, that is a record. It's never been that high. I don't believe it's ever been that high. Now, the lowest it's ever been back here in 1979, 1980 was 14 to 1, which meant that for every 14 ounces of silver, you could trade that in for 1 ounce of gold. If you're in Vegas, it's called coloring up. And this is extraordinary because at $11 per ounce, silver is going to become one of the things that people are going to start buying massive quantities of. In fact, they already are. Several of the gold and silver wholesalers have said they are out of both gold and silver. They don't have any supply. What does that mean? Supply and demand. People are demanding silver and gold. There is no supply. Price is going to go up. Let's assume that all the gold bugs are correct and gold goes up to, I don't know, say $10,000 an ounce. And let's assume that the gold-silver ratio drops to, I don't know, 5 to 1. So in order to buy an ounce of gold, you would need 5 ounces of silver. That would make every ounce of silver worth $2,000. That's a hell of a jump in price from 11. Now, I'm not saying that's going to happen. I'm simply pointing out this is how the market works. Okay? As I said, the circuit breaker halted at the open. 15 minutes. It's just stopped. Okay? And this is, I pulled these up early this morning just to make sure. The other thing is that the VIX was broken. The VIX is the volatility index. It's the index that shows fear versus greed. There's so much fear. It jumped so high that it couldn't keep track, and so therefore it broke. What does that mean to you and I? You and I who own and hodl and buy Bitcoin. Well, I woke up this morning and checked the price of Bitcoin just because, and it said on my phone $4,900 per coin. And I'm thinking, oh, hold on. If it's dropping, maybe I need to sell. And then I came over and I looked at the price. And this is the current price at $5,060 per coin. And this is a daily chart. I purposely brought up the daily because I wanted to show you what is going on. We had this massive drop 5 days ago on the 12th. Okay? Let's see. Yeah, I guess it was 4 days ago. Today's the 16th. So we had a massive drop. And let's see if I can pull this up. We want price range. See if this will do this for me. And I want just the wick. So, dropped 42.75% that day. Okay? Now, we know, because we've been in Bitcoin forever, we know that a 40% drop in a day that's normal. It's nothing to get excited about. The stock market dropped just under 13% today, and everyone is panicking. This is the difference between the mindset of a Bitcoin or crypto trader, investor, and a stock trader or investor. But the thing I want to point out is we've had 4 days. This is the fourth day Market hasn't closed for the day, but we are going sideways. Actually, we just started this new one. So here's the newest candle, and it's going sideways. It's not going up. It's not going down. What does that mean? It's a good sign. It tells me that the price of Bitcoin is fairly stable. What caused this drop? Well, nobody knows for sure. My guess, and it's all it is a guess. My guess is that something like the scammers from Zero Token, who had millions of dollars worth of Bitcoin and Ethereum, they found an exchange that would accept their Bitcoin, and so they dumped it all on the exchange and cashed out. Well, dumping that much Bitcoin into the market dropped the price, and it dropped it precipitously. That caused a panic on two fronts. One, people who were watching the price. Because remember, when we looked at this by hourly, let's go back and let me see if we can do this. When I looked at this on the hourly, there we go. We had this one, which was at 4 a.m. in the morning on the 12th. So 6 a.m. Eastern. I'm 2 hours behind the East Coast. I'm in that phantom time zone known as Mountain Time. 4 a.m. my time, 6 a.m. Eastern. That would have put it in the evening if you were in China. And the Zero Token scammers, a lot of them were arrested. They're Chinese. They were arrested in China. They didn't get all of them. So the ones that got away could have found an exchange somewhere in the world that would take their coins and exchange them out for currency of some sort. Currency. So they did. That caused a ripple effect because now the price dropped from, what was it? It dropped from 73.84 down to, well, at the lowest, it dropped down to 5,045. Now, most people who own Bitcoin, who bought Bitcoin, unlike you and I, they're not smart. They think they're smarter than we are. What they did was they went out to someplace like BitMEX, which allows them to leverage buy. So, and when you can leverage up to 100x, if the market's going up, if you buy a long position, you say, I want to buy 1 Bitcoin, and I want to put 100x leverage on it. Okay, so they're lending you 99 Bitcoin to play with. Well, if it goes up by that amount, let's say you bought it at $10,000. If it goes up another $10,000, you now have 100 Bitcoin, each one worth another 10, so it would be $20,000. You now have a whole bunch of money you didn't have before, and you can afford, because you bought that 99 Bitcoin at 10 grand each. You can basically, what happens is you give half the money that you have in your account back to the exchange. So you've paid off that 99 Bitcoin, and now you have 100 Bitcoin worth of money free and clear. That's the idea. The problem is that it works both directions. If it goes up, great, you've made a whole bunch of money. If it goes down, and again, you only have to go down, especially if you're doing 100 times leverage, it only has to go down 1%. And it dropped a huge amount at 4 a.m. my time, 6 a.m. Eastern. So what then happened is people woke up to margin calls. You owe us money. The exchanges sent out notifications saying, hey, your Bitcoin, your 100 Bitcoin that you borrowed from us just dropped in price significantly. So either give us the amount that you owe, or sell all your Bitcoin. We're calling your margin. This is exactly what happened in the stock crash of 1929. The exact same thing happened. That's why you hear trails of brokers jumping off of ledges, is because they were leveraged so highly they knew they could never pay it back, and so they committed suicide rather than go into that much debt that they thought they would never be able to pay back. This is exactly what happened, and that's what caused this second drop. at 5 o'clock my time, 5 p.m., 1700, 5 p.m. my time, which would have been 7 p.m. Eastern. And again, would have been early in the morning China time, but this is now affecting everybody in the world. So now we've got this panic sell because people are leveraged, and they have to pay back what they owe. There's no I will gladly pay you Tuesday for a Bitcoin today. Their margin has already been called, and so therefore they have to pay it. And they have to pay it with not only what they borrowed, but what they already owned, what they put up as collateral. And so a bunch more Bitcoin went into the market, into the exchange, and flooded the market, and the price dropped. Well, that was a single day event. Fortunately, it was only a single day event, and based on what I'm saying, yeah, the market's going up and going down. But what this tells me is that the the bears don't have enough power to move the market any further down. If they did, they would. This level of right around 5,000, $4,700 to $5,000 per Bitcoin, I'm not going to call it a bottom. There's no way that I or anyone else can know that this is the bottom. What I am comfortable in saying is that it looks like it may be as low as we go. And if that's the case, I won't be surprised if it takes several days or even a week or two for it to start working its way back up. But I have every confidence that it will, because the longer this goes sideways, let me rephrase that, the longer it doesn't go any further down, the more confidence people who have already invested in Bitcoin, who may have pulled their money out because they saw this huge drop in price, the more likely they are to say, okay, the worst is over, let's go ahead and put our money back into Bitcoin and hope it goes back up. That's going to tend to drive the price back up. Now, the other thing that's going to happen is because Bitcoin and eventually gold and silver, because gold and silver are always and have always been hedges against stock market prices, they're also going to go up. So here in a little while, give it a couple of months, because as I keep telling you, if you hear it on Kramer, if you hear it on your favorite cable news channel, it's already too late. You've missed it. So give it a couple of months for the price of Bitcoin to go back up naturally. And I suspect what you're going to find is that the cable news channels, the cable financial channels are going to start talking about how Bitcoin, because I absolutely believe Bitcoin is going to raise in price faster than either gold or silver. And so they're going to start talking about, price of gold and silver going up, stock market still going down, because while we are not officially in a recession until we've had two consecutive quarters of contraction in the GDP, this is a recession. This is the beginning of the recession. And based on what we're seeing in the markets, in the stock markets, this very well could be the beginning of a depression. A light recession is a drop of 20 to 40%. A deep recession is a drop of 40 to 60%. And a depression is from 60 to 80%. And we're talking about 60 to 80% from the highs. Well, if we look at, let's see here, was it Dow Jones 30? Yeah, this will work. So we're looking at, and of course it goes back on auto, we're looking at highs just under 3,000, just under 30,000, okay? We have already dropped, let's go ahead and take our little, we'll call this there, we'll come that back up. Stop. That's not what I want. We've already dropped 31.39%. And again, this is a daily chart, but from the highs, which were, in February, we've dropped just under 40%. You and I are used to a 40% drop in a day. It took a month for the Dow to drop that much, and everybody is completely panicking. Why? Because this is unheard of. This doesn't happen. This doesn't happen all that often in the Dow. And if we change this from a daily to a weekly, it'll make it a little bit more easier to see. So we have this drop of 31%. We are already in recession territory. If it goes down, let's see here, let's delete that. Whoops, let's hit, come on. There we go. So what would it take to become a, so 60%? So we're looking at a price of, we're looking at the Dow hitting 11.6, 11.7 would be a deep recession, and anything under 11.6. So if it dropped down, oh, I can't. I've got it. Let's pull this up a little higher here. There we go. So if we dropped 60%, that's going to be on anything under 11.7. So anything under 11.7 is a depression. Let's just go ahead and leave it right there. 11.6, 11.7. So anything under 11.7, where the Dow Jones drops to a level of 11.7 or below, we're in a depression. That's depression territory. And as you can see, I'm not on a logarithmic scale. I'm on the standard scale. We're nearly halfway there. We are halfway there. We are halfway there. So, yes, this absolutely could turn into a depression. You know, the things your grandparents and great-grandparents talked about when they were young, or kids. My dad was a kid. My dad was born during the Depression. My mom was born just before the Depression. Yeah, I'm old. But I grew up listening to stories of what life was like. It's going to be painful. It's going to be very painful. It's going to be extremely painful. But here's the thing. While this is dropping, I absolutely expect Bitcoin to be coming up and going back up towards highs and new highs and much more money. The wealth transfer from the people who have been in stocks, from the stock market, the transfer of wealth from the stock market to the crypto market has begun. This is the very beginning of it. And again, as always, not financial advice. Me personally, I'm glad I'm in crypto because I expect to see a large increase in my net worth over the next couple of years while the stock market is in depression. Anyway, that's what I had for you today. This is still much longer than I wanted it to be, but I wanted to get this information out to you as quickly as possible. So I will see you Friday. You have a good week.